Sandeep, morning and thanks for joining in. Can you tell us how the demand environment is right now? Because costs are inching up higher, but then demand is also coming back. Is there this double-digit growth, high teens growth? Is it something that you can continue in the second half of the year?
We are fairly confident that we'll continue with the double-digit growth in line with the guidance we have given. Over the last 6 months, we have seen the demand fluctuation, like especially the demand in the festive season was not that great, and but it's in the off late. In the last 3 weeks, we are seeing that the demand is again coming back. So we are fairly confident that the guidance which we are given to the market in terms of the growth, the momentum of that we should be able to continue. Right now, the whole market is suffering the input high price volatilities, like on the plastic side, PVC side in the business, the prices have come down. On the other side, the gases prices have gone up. So margins protection will happen, but the growth number we are fairly confident.
Okay, all right. Hi, Mr. Sikka. Good morning. Earlier, you were guiding for 18 to 20%, right, in terms of growth. Do you stick to that for the year, for FY23? And give us some margin breakup. If you want to give us segmental, what is the guidance from year on? Because some of those input costs have started cooling off. So my guess is that margins could improve. Do you concur? And if yes, what should the guidance be?
Right now, if you see the margins which we have right now in terms of EBITDA margins, they have a delta of around 4.5%, which are relating to the input prices impact. And we feel on a consolidated basis, our margin trajectory should be in a range of 14 to 16%. These are EBITDA margins, which I'm talking of. And definitely on that 18 to 20% growth, as I said, we are confident we should be able to maintain that momentum going forward.
Just a word on the margins, sir. For the last quarter, your margins are in single digits.
Yes, I know, because if you see the impact of that is due to the input prices, like on the plastic PVC side, the input prices came down drastically. And in the last quarter itself, we had mark-to-market losses on the inventory ranging around 19 to 20 crores. So if you add that up, the normalized margins should get, ranging 14 to 16% that I'm talking of.
Sandeep, hi, good morning. So this 4 to 4.5% delta that you're talking about, right? That's big. Can't that be sort of bridged with price increases?
If you see, right now the prices will normalize over a period of time. Like I think another quarter 3 will be a quarter with an impact. But we feel the quarter 4, the margins should get normalized, and the input losses on the plastic PVC business, plastic pipes business, which we do. So that will get normalized, and accordingly, we feel that on overall trajectory that delta will get normalized. So what I'm talking here, that 4% is a normalized. I'm not talking of a specific for the year.
Is this largely because of the pipes segment? I mean, this big margin problem? On sanitary ware, faucets, are things much better?
The main sufferer is the plastic pipe business, or 25 crores in the first half is on the inventory losses, and, due to the certain drop in the prices. And even on the sanitary ware side, the input gas prices increased drastically over the last 6 months. So another 10 to 12 crores is on account of that. So if you add it up, you will get the number of what I'm talking about.
Okay, and I wanted to have some thoughts on the appliance business. Currently, you're doing about 125, 130 crores per quarter. The last time you had said that you're looking at 1,000 crores from this business. So where are you at in terms of market share, and what could the growth trajectory look like?
So market has been slightly dismal here, although our numbers are much better than what we are doing, when you see the overall industry trends. We lost a little bit of market on the fans, which we launched last year. But this is something, we are number 2 player on kitchen chimneys today, and with almost 4 or 5 years of business. And going forward, we feel that we should be able to catch up 1,000 crore, because this guidance was given last year and it was ranging in 3 to 4 years time. So we'll catch it up.
By 2025, you think you'll be at this 1,000 crore mark?
We should be.
Okay, and final question then on your debt front. It's gone up a little bit. What is the consolidated debt right now? And given your ambitious plans, do you see it trending higher, or do you expect it to cool down from here?
So the consolidated debt is at around 850 crores. But this primarily the debt has been acquired when we did acquisition of the manufacturing of sanitary ware faucets and pipe plants in March 2022. We feel that with the profits coming through and the surplus cash flows which will accrue to us in the next 2 to 3 years, major chunk of this debt we should be able to pay off.
How much?
Ranging between 200 and 250 crores in next 2 years, and then I think and every year thereof we will have to pay off.
Okay. Appreciate all the numbers that you've given us and your thoughts on the business as well. All the best. That's Hindware Home. But just